Debit and credit explained like you've never heard before. What if I told you every financial success story, every business collapse, every millionaire, every bankrupt person, all of them are controlled by just two words: debit and credit? Most people think they're confusing accounting terms, but what if I told you they're actually the language of money? And once you understand them, you'll never look at money the same way again. Let's begin. Imagine two powerful forces running the financial world. One is called debit, the other is called credit. They are not enemies, they are not competitors, they are partners. In accounting, every single transaction has both. There is no debit without credit. There is no credit without debit. That's the first rule of money. Everything must balance. Let's remove the confusion. In basic accounting, debit means the left side of an account. Credit means the right side. That's it. They are positions, not good or bad, but here's where it gets interesting. Different accounts increase differently. Assets increase with debit. Expenses increase with debit. Liabilities increase with credit. Income increases with credit. Equity increases with credit. Now let's make that make sense. Let's say you start a small business. You put $10,000 from your pocket into the business. What happens? Your business receives cash. Cash is an asset. Assets increase with debit. So debit cash $10,000. Where did that money come from? It came from you, the owner. That increases owner's equity. Equity increases with credit. So credit owner's equity $10,000. That's it. Two sides, perfect balance. Money didn't just appear, it came from somewhere. That's the second rule of money. Every resource has a source. Now your business buys a laptop for $2,000 cash. What happens? Laptop is an asset. Assets increase with debit. Debit equipment $2,000, but you paid cash. Cash is an asset. Assets decrease with credit. Credit cash $2,000. Notice something powerful. Your total assets didn't change. You just converted one asset into another. Cash became equipment. That's how businesses think. They don't just spend money. They convert money into assets. Here's where people go wrong. They think debit means loss and credit means gain. Not true. If you pay rent, rent is an expense. Expenses increase with debit. So debit, rent, expense. If you earn salary, income increases with credit. So credit, revenue. See, debit isn't bad, credit isn't good. They are just rules, but misunderstanding them creates financial chaos. Now let's go deeper. Your life is also a ledger. When you buy things that don't grow in value, you are debiting expenses. When you invest in skills, you are debiting assets. When you take loans, you are crediting liabilities. If your liabilities grow faster than your assets, your life goes out of balance, and that's when stress begins. Scene 7, the psychology behind it. Most people live like this. Income comes in, right arrow, they spend, right arrow, they hope something remains. But financially smart people think differently. They understand structure. They track assets, liabilities, income, expenses. They don't fear debit. They don't worship credit, they respect balance. Here's the golden accounting equation. Assets equals liabilities plus equity. This equation must always balance. If it doesn't, something is wrong. Now apply that to life. Your assets, skills, investments, savings, health. Your liabilities, debt, obligations, uncontrolled lifestyle. Your equity, that's your net worth, that's your freedom. If your assets grow faster than your liabilities, your equity grows, and that's wealth. People increase lifestyle before increasing assets. New car on loan, bigger house on mortgage, latest phone on EMI. What are they doing? They're crediting liabilities faster than debiting assets. That imbalance eventually shows up. Not immediately, but eventually. And accounting never lies. Here's how financially disciplined people operate. They increase income, credit, revenue. They build assets, debit, investments. They reduce high-interest liabilities. They control expenses. They review their financial statements regularly. They treat their life like a business, because it is. If you understand debit and credit, you understand how businesses work, how banks operate, how companies grow, why some people build wealth, why others stay stuck. It's not about earning more, it's about understanding the system. Money follows rules, and debit and credit are those rules. So next time someone says, accounting is boring, remember this: accounting is the language of money. Debit and credit are the grammar. If you don't know the grammar, you can't speak the language. And if you can't speak the language, you will always struggle financially. But once you understand it, you start seeing patterns. You stop making emotional money decisions. You start thinking like a builder. So here's your challenge: start tracking your money. Write down, what are your assets? What are your liabilities? What are you debiting daily? What are you crediting daily? Because at the end of the year, at the end of your career, at the end of your life, the world reads only one thing: your balance sheet. Understand debit, understand credit, master balance, and you master money.